In this lesson, we're going to review the function for the What If Analysis Scenario Manager within Microsoft Excel. The Scenario Manager is a what if analysis tool. There's a few what if analysis tools within Excel. There's the Scenario Manager, Goal Seek, and Data Table. And so we're going to be looking at the Scenario Manager for this Excel course. It's a tool that's used to analyze the impact of variables on certain data sets. So for example, if you're creating a budget for profit and loss and you have different scenarios that can be generated and assigned different values to certain variable expenses, then the scenario manager can be helpful. Let's say you have a best case, worst case, and most probable case scenario, and you want to run those three scenarios within Excel and save them as scenarios so that you can quickly toggle between them and see the results and the impact of them. Then the scenario manager is a great tool to use to store that information and store those variables so that you can quickly pull up those different what if analyses. Let's go through an example here and illustrate how it works. So in our example, we'll compare different car lease options by analyzing the impact of certain variables on monthly lease payments. The variables that we'll be changing include car model, price, down payment, yearly rate, and loan term. Note that all the input cells are highlighted in gray in this example below. In the first column, we have the description, second column, we have detail, and in the third column, we have the changing cells reference. So here we've got the minivan. It's priced at $30,000. The sales tax on it is $3,900, which is 13%. The total purchase price is going to be the $30,000 plus the $39,000, and the down payment that's required is $4,000. The amount that's going to be financed is the difference between the total amount and the down payment, so $33,900 minus the $4,000, and so a total of $29,900 is going to be financed. And the rate of interest, I'm going to just switch the decimal places that are shown here. The rate of interest is 1.90%, and it's going to be financed over a 3-year term. So the monthly payments that are required to pay off this loan, here we're using the payment function. It's actually $855.11. That will be able to get us the amount of the loan paid off within the 3-year period. So now let's assume that minivan is one of the options. But we also want to know what the pricing would look like if we were to investigate purchasing a different type of vehicle. Let's say a BMW, or alternatively, let's say we were thinking about purchasing a Lexus. So let's use the scenario manager in order to model out those different circumstances. So the first thing that we're going to do is we're going to create a scenario using the scenario manager by going to the data tab and then clicking on the what if analysis, and then clicking on Scenario Manager. And as you can see, I've already set up 3 different scenarios here. I've set up one for the BMW, the Lexus, and the minivan. Now, the minivan's scenario is pretty much what you see on screen here. And what does the comment tell us and the changing cells? Tells us that the changing cells are the ones that are highlighted in gray here. So cells D19 and D20, so that's the minivan description, the price of $30,000, those are variable inputs. The sales tax is driven off of a percentage, so that's not going to be something that changes between models. The next item that changes is the down payment. The down payment is something that will change depending on the type of vehicle purchased. And the yearly rate is also different along with a loan term depending on which type of vehicle is purchased for this dealership. So I'm going to show you what the end result is for each of these scenarios, and then we'll walk through how to build it ground up. But as you can see, we've got 3 different scenarios we've set up here in this scenario manager table. We've got the minivan that's shown on screen. But if I want to see what the implication is of having a Lexus purchase, I can click on the Lexus and then I can click Show. And based on the inputs that I summarized into the model, it'll spit out what the scenario looks like for purchasing the Lexus. The Lexus is $40,000. The total cost is $45,200. The down payment's $4,500. The yearly rate is 2.5%. The loan is 3 years, and the payments are $1,174.66 per month. I'm now going to switch to a BMW, and you can see the result of the BMW as well. And so the way this scenario manager is working is it's taking into consideration all of the inputs based on each vehicle that's being purchased, and it's calculating the monthly payment for me. So that's really the end goal of what I wanted to achieve in these different scenarios. I want to see, based on my affordability and what I know I can afford on a monthly basis, what are my different options and pricing considerations for the three vehicles. Well, we know that the minivan is the cheapest at less than $900 a month. The Lexus is $1,174, so it's the most expensive, and the BMW is $925 a month, so it's in the middle. Even though the BMW actually costs more money, it's $50,000 as a list price, it ends up being cheaper per month compared to the Lexus, which is $1,174. And the reason for that is because the loan term for the BMW is 5 years, but the loan term for the Lexus is only 3 years. So in terms of affordability, the Lexus is going to be the most expensive for me, but it's going to cost less over the long run. But what I want to show you in this lesson is how to build a scenario in Excel. So I'm going to go ahead and I'm going to delete the scenarios that I've already set up, and we're going to recreate them. So I'm going to go up to Scenario Manager. I'm going to delete the different scenarios by clicking on each of them and then hitting the delete button. And then I'm going to click on Close. And as you can see on screen here, I have the different steps laid out on how to create this scenario. So first you click on Add, and then you type the name for the scenario. So in the, one of the cases, it was the BMW 325i that was under consideration for purchase. And then you have to input what cells you'll be changing and specify what content will be changed during the analysis. So let's go through how we're going to build a scenario manager. First, I'm going to go to the what if analysis, and I'm going to click on Scenario Manager. Then I'm going to click Add, and I'm going to create a scenario for the BMW 325i purchase. Now, under Changing Cells, I'm going to select the variable inputs. Now, in this case, the variable inputs are the name of the vehicle, so D19, the price of the vehicle, D20, the down payment, D23, the yearly rate, D25, and the loan term, D26. I'm going to hit OK. And then it's asking me what the different values are for each of these scenarios. So what I'm going to do is I am going to input BMW 325i for D19, which is the model. And then in D20, I'm going to input the purchase price of the BMW. I'm going to put $50,000 in this case. For the down payment, I'm going to say the down payment is $3,000. The yearly rate, let's put 3%. And let's say it has to be paid over 2 years in this case. So I'm going to put 2 for cell D26. Then I'm going to click Add. And this scenario has been created. And what I can do now is I can show the scenario. And because I have the monthly payment as a formula that's driven off of the inputs, it's actually going to automatically update and show me what the monthly payment would be under this scenario, which is very helpful because at the end of the day, that's what my decision-making criteria is going to be. I know that I have a certain budget. Let's say I don't want to spend more than $1,500 a month on a vehicle. Well, if that's the case, then this BMW is out of the question based on the inputs that were provided by the dealership. Let's go through another scenario for the Lexus. So what I'm going to do is go to the Scenario Manager, and as you can see, I only have one scenario set up here, but I can create another scenario. Let's say I want to create a scenario for the Lexus. I'm going to type Lexus. My input cells do not change. They're consistent with the input cells that existed with the BMW. But the amounts are going to change. I'm going to say the purchase price is only $40,000, and let's assume the down payment is more than the BMW was. It's $4,000. The interest rate, let's put 4%, and let's say it has to be repaid over 4 years. So the input types are the same, but the amounts that I'm going to put in for the Lexus are obviously different because it's a different vehicle purchase than the BMW. I'm going to click OK, and then I'm going to click Show. As you can see, the Lexus scenario results in monthly payments of $918.97, which is more affordable for me from a cash flow perspective. I can quickly toggle back to the BMW scenario and click Show if I wanted to see the results of that scenario again, now that I have two scenarios set up. So these scenarios are going to be stored within Excel now that I've created them. Let's create one more example for the minivan. So I'm going to create a scenario with the name minivan. I'm going to click OK, and I'm going to change the title to minivan for cell D19. And for the inputs, let's say the minivan cost $34,000. Let's say the down payment is $1,000, and let's assume a 1.5% interest rate, and let's plug in a 5-year repayment period. I'm going to click OK, and then I'm going to click Show Result. As you can see, the monthly payment that is required for the minivan is only $647.74. So that one is clearly the most affordable under the three scenarios that I've now created. Anytime I want to go back and see the results of the different scenarios, I can just go back to the scenario manager and pull open the different scenario options that are available for the BMW, the Lexus, and the minivan. From there, all I need to do is click the Show button, and it'll show me the results of that scenario. Now, this is a very simplistic example that we've gone through. What I like about the scenario manager is the power behind it. If you think about it, if you're creating a full-blown financial model, let's say an operating model used by a corporation, and you've gone through all of the inputs, you've built it up, and you're in the final stages of it being approved, and you're reviewing it with the executive team, and they want to see the impact of a sensitivity analysis, then that's a good opportunity for you to step back and say, maybe I should be using the scenario manager to create those different what-if scenarios. Let's say they want to see the impact of a best case, a worst case, and a most probable case scenario. Let's say they want to do that by impacting the revenue, the cost of goods sold, operating expenses, net income, and they want to see what the results of each of those are based on the different scenarios. Other things would be impacted, like the profit margin and different financial ratios based on different what-if scenarios that you created. So let's assume that they wanted to create those what-if scenarios based on the sales team achievement ratios of, let's say, 50%, 60%, and 75%. Those three sales achievement rates would trickle from the top line of revenue all the way down to the bottom line of net income, and it would impact all of your financial ratios along the way. And so that can be easily achieved using the scenario manager instead of creating 3 different Excel workbook versions of the financial model. This is useful because you can then toggle between the scenarios, and it'll update the entire workbook when you select the relevant scenario. The other thing that you can do with the scenario manager is display the results side by side. Let me show you how that works. You need to go to the scenario manager, click on the summary button, and then there are 2 options that appear, the scenario summary and the scenario pivot table. If you click on the scenario pivot table, then click on the result cell for the monthly payments, a new tab is created in the workbook showing the pivot of the scenarios created. As you can see on the screen here, it summarizes the monthly payments for the BMW, the Lexus, and the minivan. If you go back to the scenario manager and then click on the summary button, the other option that is available is the scenario summary. When you click on the scenario summary, choose the whole table data, i.e. in this case cells C19 through D27. When you do that and press OK, another tab is created summarizing the results. A comparison is provided side by side with the results, and the inputs are shown in the table summarized as well so that you can do a proper side-by-side comparison on the 3 different scenarios that are created. So that's a useful function within the scenario manager for you to summarize the different scenarios and compare them after you've created them. As you can see now, the scenario manager is a useful but commonly overlooked function in Excel. It has a lot of value if you want to perform a what-if analysis and create different scenarios and see the impact of those different scenarios on the data that you're working with. Hey guys, thanks for watching this lesson. I hope you enjoyed it. And if you did, I'd really appreciate a like and subscribe from you. And if you want to learn more about Microsoft Excel, check out these videos above. And don't forget to check out our website, commercecurve.com, where we have lots of in-depth finance and accounting courses available with full training workbooks. All of our courses come with complete workbooks of lessons, examples, pre-built financial models, and training video. Hope to see you there.